Welcome back. It's been a couple of weeks since I have been working on this new series of technical content, which I hope you will really love. In this short video, I want to talk about how Darwin assets are a very clever engineering piece of work. Afterwards, I will show and run some fresh code so that you can get a real view on what I'm saying, and finally, I will leave room for you to experiment with it and further expand that research. Basically and simply said, Darwins are highly liquid assets. Their associated investment risk is restricted due to the Darwinex risk manager sitting in the middle. And finally, there is another characteristic that holds in place that for me is one of the most interesting ones. Different Darwins are built on different trading strategy types, giving you, the investor, not just an asset diversification, but also market approach one. That is, you are investing on many assets and also many market approaches like sentiment trading, news trading, momentum, mean reverting, or any pattern-related strategy. This gives us traders a new and unique possibility to approach the global markets. It will be even more global once the interactive brokers integration is completed, so stay tuned for the updates on that also. For this video, I have developed more functionality on the research framework I used in previous videos to now incorporate Darwin data retrieval and make any kind of analysis out of it. If you still struggle to analyze financial time series and understand their fundamentals, I suggest to go and look my other videos in this playlist to understand more about their intrinsics. It is crystal clear that there is a huge present potential, in my opinion, in Darwin assets, mainly because the Darwin asset is a noise-filtered asset due to the fact that there has been some other trader that has been able to create this type of time series out of many of these other ones. Is this directly related to that Darwin assets are easier to trade? Not necessarily, but for sure that there is room for research. You have to certainly trust the trader and have some information about the underlying strategy to improve that decision making. For now, I will just leave you with an example of how to analyze Darwin assets, and I suggest you to take this exact code that you see on my screen now, together with the previous video's code, and execute them parallelly to compare how Darwin assets, for example, and their returns distributions are compared to what traditional asset distributions are. As you can see here, we will create asset objects just like before, and the subsequent code is exactly the same as with traditional assets, generalizing at maximum the previously presented framework and given even more flexibility to accomplish analysis on Darwin assets. I have also created the Charles Darwin class that includes functionality so that you can download data from the FTP server and then analyze it. You can do anything from getting returns, plotting alternative representations like tick bars, and etc. for any Darwin that you want. Even I have implemented some other methods like plotting candles and indicators. And you just need to change the different assets that you want to analyze just in the assets list. I hope that this has served as an introduction to the why question for the following videos of this series related to the new technology development of the Alpha team, the Mendel Framework. Stay tuned for following videos and see you soon.